Level 1. You have no credit history. The first time you realize your credit score matters is not at a bank. It is inside the office of an apartment complex. You have just toured a one-bedroom apartment, and the rent is within what you can afford. You sit down in the leasing office and place 2 months of security deposit money, your pay stubs, and a printed bank statement on the desk. The apartment manager opens the application page and enters your name, your date of birth, and your social security number. Then he pauses for 3 seconds. 3 seconds is enough for you to know something is wrong. He says your income looks fine, but the rental screening system cannot find enough credit history. It sounds gentle. What it really means is this. The system is not saying you did something wrong. It is saying it does not know enough about you to trust you. You have no late payments, no collections, and no bankruptcy record. By common sense, that should be a good thing. But in the American credit system, having no record does not mean having good credit. To a rental screening system, you are not low risk, and you are not high risk. Your file is too thin. There is not enough history for it to make a call. It can only see one thing: whether your past has enough records showing that you pay on time. In the end, the apartment manager gives you 2 options. Find a cosigner, or put down a higher security deposit. You walk outside and call your mother. You ask if she can help you sign a cosigner form. She is quiet for a few seconds, then says she is not sure her own credit is good enough. This is the first time your credit score makes you pay a price. It does not directly reject you. It just takes an apartment you could afford and adds 2 new conditions: more deposit money or someone with better credit to sign for you. Level 2. You are no longer blank. You are high risk. A few years later, you finally have a credit history, but it is not the kind of history you wanted. That year, you had just changed jobs. Your old paycheck was already gone, and your new paycheck had not arrived yet. Then your car broke down, and you still needed it to get to work. Your phone bill was late once, and the minimum payment on your credit card was 3 days late. You also had a hospital bill. You thought insurance would handle it, but a few months later, you received a collection letter. None of it looked like a disaster, but a credit record does not save reasons. It only records what happened. A few late bills, plus a hospital bill you thought had already been handled, finally pushed your score below 580. To get to work on time, you walk into a used car dealership. At first, the salesman is friendly. He shows you cars, tells you this one gets good gas mileage and that one has low miles. Then he asks how much you can pay per month. His tone makes it sound like if you give him a number, you can drive the car home. But after he enters your information and the result appears on the screen, his voice slows down. A minute ago, he was helping you figure out which car made sense for your commute. Now he starts saying, "Let me see which bank is willing to do this." That sounds like he is helping you. What it really means is that you are no longer a normal loan customer. It is not that you cannot buy the car. It is that you have to buy the same car with higher interest and a longer loan. The salesman prints out the offer. The car price is $14,000, but the interest is frighteningly high. To make the monthly payment look less extreme, the loan term has been stretched longer. He tells you this is the easiest option to get approved right now. This is the real punishment of a low credit score. It is not that you cannot buy things. It is that you have to pay more for the same things. Level 3. You are allowed to rebuild your credit. Your credit score moves back into the 580 to 669 range. You are finally out of the hardest approval tier. But that does not mean the bank feels safe with you. It only means the bank is willing to let you restart with the smallest possible limit. You begin pulling your record back, little by little, because you know that if this continues, every apartment application, every car purchase, and every credit card application will become more expensive. You start paying on time and stop casually applying for new credit cards. You call about that collection bill and finally use money you did not want to spend to take care of it. Every month, you open your credit report and check it, making sure there are no new bad records and no unfamiliar account suddenly appearing under your name. Later, your credit score slowly rises again, from 580 to 638. You think that should be enough, but the bank still does not fully trust you. It is only willing to give you a very small limit, and see how you handle it. One time, you apply for a credit card. The bank does not reject you outright, but it is not willing to give you the kind of limit that comes with a normal credit card. It requires you to put down a $300 deposit first, then gives you a card with a $300 limit. On the surface, it looks like a credit card. In reality, you are using your own money to buy a chance to rebuild credit. So every month, you only dare to spend a little. $42 at the grocery store, $28 for gas, then you pay it off quickly. You are trying to show the bank that you can use the card and pay it back on time. Slowly, you learn another rule. Banks do not only look at whether you have a credit limit, they also look at how much of it you use. If you only have a $1,000 limit, but keep running it up to $950, even if you pay every month, the system will still think you are under pressure. From the outside, it looks like you have almost used up all the money available to you. So you start paying the credit card balance down as much as possible before the statement comes out. Not because you do not need to spend money, but because your credit report shows the balance. It does not show why the balance got there. The closer you are to maxing out the card, the more the bank thinks you are short on cash. That is the hardest part of this level. You need credit the most, but your account has to look like you do not need credit at all. Level 4. You finally enter the normal process. One day, you open the app on your phone and see that your score is around 700. Nothing changes immediately. Your paycheck does not go up. Your rent does not go down. Your car loan does not disappear. But from this point on, many applications no longer get stuck at the very beginning. Banks start mailing you real credit card offers, not the kind of card where you have to put down a deposit first, but a credit card with a real limit. The limit may be $2,000 or maybe $3,500. The rewards are not especially good, and the interest is not low, but at least you are no longer the person who has to prove yourself first. You apply for an apartment again. This time, the apartment manager does not pause and frown. He does not say you need additional review. He just prints the documents, asks you to sign, tells you where the trash room is, and how much the parking space costs per month. The whole process feels strangely normal. You almost want to thank him, but you quickly realize he did not do anything special for you. This time, the rental screening report simply did not mark you as a risk. That is the change at this level. You have not become rich, and you have not received special treatment. You have simply gone from the person who needs extra explaining to the person who can be processed normally. If you have lived through the earlier levels, you know that normal itself is an upgrade. At this level, what your credit score gives you is not privilege. It gives you a little less explaining, a little less deposit, and a few fewer moments where things get stuck. Level 5, you start getting better prices. Once your score moves into the 740 to 799 range, the change is no longer just about whether you can get approved. It is about what the terms look like after approval. You start noticing that you pay less for the same things. Not because you buy less, but because the price other people give you has changed. You go to buy a car again. The process is the same. Driver's license, income, address, credit authorization. The salesman still enters your information into the system, and you still wait for the screen to show the result. But this time, after he looks at it, he says, "Your profile looks good." That sentence sounds ordinary, but it directly affects how much money you will pay over the next few years. For the same car, someone else might pay $420 a month. You used to have to pay $560. Now, you are finally getting closer to the normal price. You no longer have to pay so much extra for the same car. You apply for a travel credit card, and the bank gives you a $12,000 limit right away. You did not actually ask for that much, but the bank offers it because your record suggests you probably will not max out the limit and stop paying. That is the first time you understand that a higher credit limit is sometimes not given because you need the money, but because you have proved that you do not need it. You may feel like you are being valued, but more accurately, you are being repriced. The bank does not like you more as a person. It just sees you as cheaper, more stable, and more predictable. Level 6. Above 800. But that does not mean you have money. When your score goes above 800, a lot of problems simply stop showing up. When you apply for an apartment, no one asks you to pay an extra deposit. Credit cards get approved quickly. On loan calls, the person on the other end sounds more relaxed. The credit score on your phone is no longer a number that makes you anxious every day. But an 800 score does not automatically make you wealthy. It will not pay your rent, increase your salary, or make you stop worrying about layoffs. It does one thing. It makes the credit system more willing to trust you. But trusting that you will pay money back and believing you can afford a large mortgage are two different things. When you apply for a mortgage, you think an 800 score should be persuasive enough. At first, it really does go smoothly. The loan officer is polite and quickly sends over the list of documents. Your credit history does not hold up the application. You think the hardest part is already over. But soon, they start looking at something else. How much you actually earn every month. How much you owe on student loans. How much longer you still have on the car loan. Whether your credit cards have balances. Once those numbers are placed together, they decide something different. Not whether you were reliable in the past, but how much room you have every month in the future. Someone with an 810 score may have a strong credit record, but average income, while still carrying a car loan and student loans every month. The bank may be willing to give that person a decent interest rate, but may not be willing to approve the loan amount they want. Another person may only have a 740 score, but higher income, less debt, and a stronger down payment. Even if the rate is not the absolute lowest, the bank may be more willing to approve that application. So you slowly understand that credit score matters, but it is not everything. Level 7. High credit score, plus high income and assets. The real change happens when these things stack together. You do not just have a high score. You also have stable income, not much debt, savings in your accounts, and a retirement account that is growing. Over the past few years, there have been no late payments, no collections, and no strange records. At this point, what the bank sees is not just someone who pays on time. It sees a lower-risk customer who may bring in more business later, and that makes you worth keeping. When you apply for a mortgage, the loan officer is no longer just collecting documents from a checklist. He starts helping you compare options. What happens if you put more money down? How to choose the loan term? And whether the monthly payment can be brought down to a more comfortable place. You ask whether the interest rate can come down a little. The person does not immediately say no. He says, "Let me see if there is any way to adjust it." That sentence rarely appears at lower credit levels. People with low scores are usually waiting for one result, approved or denied. What you are getting now is someone trying to find better terms for you. Level 8. You start seeing the problem with the system. At this stage, you rarely think about your credit score on purpose. When your score was low, you wanted to check every day to see whether it had gone up. Once the score actually gets better, it fades into the background of your life. Because the most obvious effect of good credit is often not that it gives you a surprise, but that it creates fewer problems for you. You no longer have to keep proving that you are not a risk. Many processes simply go through smoothly, and smooth itself is the difference. But the uncomfortable part of the American credit system is that it does not only show up at banks. When you rent, landlords may look at your credit history. When you apply for insurance, in some states, insurance companies may refer to it. Some employers, when doing background checks, may also look at parts of your credit history, though they usually need your permission first. This does not mean everyone can casually look you up. The reality is more complicated than that. But for an ordinary person, the feeling is simple. Your past follows you. A credit record only keeps results. It does not keep reasons. It does not say why you paid late. It does not say whether you had just lost your job. It does not say whether you never received that bill at all. So people with low credit scores are not always irresponsible. Many times they simply did not have enough cushion. And people with high credit scores are not necessarily more moral. They may simply be more stable, have more cash cushion, or have enough time to fix the problem before it becomes a record. Everyone makes mistakes. Some people's mistakes stay on a credit report. Other people's mistakes get paid before the end of the month and disappear. That is what you were really facing at the beginning. Sitting in that leasing office, waiting for the screening result to come back.